Hey everyone, today this is a special episode on this recent Goldman Sachs report on the US economic outlook's implication of current policies for inflation, gold, and Bitcoin. So this is a Consumer Investment Management Division report from Goldman Sachs. And you guys all know Goldman Sachs is a very, very prominent investment bank, right? And you can see that here, this report was released on May 27th, 2020. That's just a couple of days ago. Today is June 3rd, 2020. Okay? And I read through the entire report. It talks about the coronavirus pandemic, talks about a lot of macroeconomic factors like the unemployment rate, the fatalities caused by the pandemic, the infections, all that trends. It's a very readable article. I put the link down the video below, and it talks about the outlooks, the future estimate of the U.S. The growth in the economy. As you can see, the GDP growth is estimated to be minus 6.3% in 2020 this year, and possibly a rebound. They're expecting a rebound of a positive 6.1% in 2020. Okay, and there are different views on the U.S. growth. The GIR, which all these are research agencies. For example, RSH Market. A friend of mine actually works for this company. They're a very prominent research agency. Okay, the IMF, International Monetary Fund. So all these are very prominent research agencies. They have different estimates on the potential U.S. GDP growth or decline numbers. Okay, what really interests us is obviously on the title is the gold and Bitcoin. So essentially their conclusion regarding the gold is that the gold has been consistently underperforming the equities. Equities have consistently outperformed inflation while gold has not, according to the past data, which I do kind of agree that that's the case over the long term. You can see that this investment horizons. I'm not sure what this data is based on. It could be based on what kind of time period this is based on, right? Investment horizon years 1 to 30 from when? From when? I'm not sure actually, just by looking at this. But that's okay. I think in general the gold in the recent year has been underperforming equities. As you can see that in 1920, here's a kind of a comparison here about the gold equities. I hope you guys just read it. Okay, so let's get to the topic here. The topic here is that Bitcoin, they want to classify Bitcoin as currency asset class. And they couldn't really put Bitcoin into either category. So the reason is, first of all, the currencies has to meet three criteria. They're used as a medium of exchange. They serve a unit of account and they serve a store of value. And the thing is, the Bitcoin right now is not really being used as a medium of exchange, right? It's not widely used. Due to the deflationary of nature of Bitcoin, I'm going to emphasize that, in my opinion, Bitcoin is not a currency. Also, it's called cryptocurrency. Bitcoin is not a currency because it's deflationary in nature, and nobody wants to. I mean, people don't really tend to spend deflationary asset, right? If you know the asset is growing in value tomorrow, you're less likely to spend that money, right? Because you know things gonna get cheaper relevant to the money you hold. For example, if you're using Bitcoin to buy a house, you know this house is getting cheaper and cheaper as time goes on compared to the Bitcoin you're holding. So today, if you wait for a year, you can buy 2 houses, right? If you wait for 2 years, you can buy 3 houses with the same amount of Bitcoin. So that's why I think Bitcoin use as a medium exchange is probably not going to happen. It serves a unit account. I think that is the That's possible. Bitcoin can be served a unit account, obviously. Number 3, their store of value. They elaborate on this. A store of value is an asset that can be saved, stored, or exchanged in the future for predictable stable value. That I disagree, right? Sovereign currencies. Some of the sovereign currencies actually do not even meet this criteria, right? For example, a lot of nations in the world where they have a really high inflation, their value is not that stable. And some of their currency value is probably even more volatile than Bitcoin. So I disagree regarding to this definition, but if they want to include this detail as part of the definition of store value, Bitcoin obviously doesn't really meet this store value because Bitcoin price is extremely volatile. Okay, now, so basically they're saying that the Bitcoin is not a currency. And now they also want to talk about, is Bitcoin an asset class? It basically says that it does not generate cash flow like bonds, does not generate any earnings through exposure to global economic growth. No earnings, that's true. Do not provide consistent diversification benefit given their unstable correlation. That's debatable, in my opinion. They have a very, they are uncorrelated, so I don't know what they're talking about, unstable correlation. Like if you have a stable correlation relative to another asset, which means you are correlated to another asset, right? Having this unstable correlation, it basically means uncorrelated, and that is a very good thesis, very good reason for diversification into Bitcoin. So this third point, I don't think that's just BS to me. Okay, fourth point, do not dampen volatility given historical value of 76. Okay, so yeah, the Bitcoin is very highly volatile, so that doesn't mean it's not an asset class. Some asset classes is very volatile. For example, some of the technology stocks, right? They're pretty volatile as well. I can show you. Actually, in the later part of the article, they contradict themselves. They're comparing Bitcoin with NASDAQ, with the technology stocks. And I can show you that Amazon is very volatile back in 1997 to 2000 and 2001. This is during dot-com bubble. It's just as volatile as Bitcoin, okay? And yet they're comparing Bitcoin with the NASDAQ, with the technology stocks, just literally on the next page. So I don't know if this is not part of the, if this is a definition of one of the requirements for the asset class, then you're basically contradicting yourself in the next page. On the next page, do not show evidence of hedging inflation. I would disagree with that. I mean, obviously the Bitcoin, if you bought any points before 2017, this is absolutely amazing hedge for inflation, right? Like you can't possibly lose. The lowest point is $3,000. If you bought in 2015, even like early 2017, you would have beaten inflation with Bitcoin. So that is the Bitcoin, the price is very volatile, but it does not show evidence of hedging inflation. That's just crazy. Like obviously in the last 10 years, this data only goes back to 2012, 2011, but you can see that in the last 9 years, this thing is amazing for hedging inflation. Okay, it just the price is very volatile. So this doesn't make any sense to me that us either. And we believe that a security whose appreciation parameter depends on whether someone else is willing to pay for higher price is unsuitable investment. That's not how that's not how Bitcoin appreciate. I want to define that here. Bitcoin appreciate because the monetary base. Actually, on the next page, they talk about it. Like in the previous page, they also contradicting with themselves. Right here. They talk about the money supply. The money supply has been increasing dramatically on this chart. Bitcoin basically is a hedge against the money supply, against excessive money printing of the central banks. And because the Bitcoin supply is limited and is a great way of hedging against the, excessive money printing. of the U.S. dollar, the excessive debasing depreciation of U.S. dollars by the Federal Reserve over the last 10 years since the financial crisis, since the '08 collapse, and this. And I don't know, like, security appreciation primarily depend on whether someone else is willing to pay for a higher price. No, it's dependent on the expansion of monetary supply, right? If the Federal Reserve prints another 20 trillion, 30 trillion dollars into the economy, I guarantee you this thing is going to go to the moon. Okay, if U.S. decides to making U.S. dollar worthless, this thing is going to go to the moon relative to the U.S. dollar. It's guaranteed. So this is not dependent on whether someone else is willing to pay for a higher price. It's not just dependent on that. It's also primarily depends on the money supply, the depreciation, the constant depreciation and printing of U.S. dollar. Okay. We also believe a hedge fund might finding trading crypto appealing because high volatility alert does not consume. Okay, so trading cryptocurrency is appealing because of high volatility and the lack of correlation. It does have unstable correlation, high volatility. That's great for trading, and that is a form of investment. These hedge funds are playing this, right? Does not constitute that allure does not constitute a viable investment. Why? Right? Give me the reason why. They don't elaborate on that. Okay, so now they're looking at the Bitcoin price, and they are on this page. It just doesn't make any sense to me now. These charts just makes no sense. First of all, they're comparing. They have the Nasdaq index. They have the TOPIX, which is the Tokyo Stock Index. 1989, which is the peak. The Japanese market had a huge bubble in the early 90s, and the Nasdaq, the S&P 500, they compare all these indexes that from the peak and the years around the peak of the bubble, and then they compare that with the Bitcoin price. That is just incorrect comparison. That's comparing apple with orange, because you are comparing the index of multiple assets. This Nasdaq index is probably several $1 trillion in market cap. The S&P is several $1 trillion. The TOPIX, the Tokyo overall market cap was probably tens and twenties, hundreds of $1 trillion at the peak, and the market cap of the Bitcoin at the peak was only about $200 billion. I remember. I think that was the market cap, but let's just review that. The market cap at the peak was only $300 billion. That's like a single company in the Nasdaq, right? Right now, Apple is like $1 trillion. Facebook's $1 trillion. This is more like a company rather than an index of stocks. So comparing a single stock to the index, it doesn't make any sense, right? You want to compare a single stock, treating a Bitcoin as a company, compare that company to another company in the past. And I can show you, like during the dot-com bubble, one of the most few of the craziest company would be Amazon, right? Look at the Amazon growth from 1997, which is only to 1999, which is only 2 years. You can see that Amazon went for 68 times. The growth for, if you bought Amazon in 1997, 2 years later you made 68 times up on your investment. That's how crazy that was. And so this chart just does not make any sense to me. They're comparing Bitcoin with the index. They should just put Amazon chart here, and they will overlap. Because like Bitcoin from 2016 to 2018, early 2018, you can see that within the same period is about let me see how much was that. It's about 47 times. So actually, during the dot-com bubble, Amazon had a crazier growth during the same similar amount of time than Bitcoin. That's how crazy Amazon was. Let me show you another stock, Cisco. You guys forgot about Cisco. Let me show you. So 2000 Cisco, if you look at Cisco, during the dot-com bubble, if you bought Cisco in 1990, in 10 years, from 1990, it was 8 cents. And but if you sell at the peak of 2000, you would have made 1,540 times. It's 554 times. 1,554 times. That's whatever, that's the 105,460%. That is insane. That is insane. And that's the more, like, that's even crazier than Bitcoin, right? If you look at Bitcoin, even if I find the lowest point, okay, let's just go to the Bitstamp chart, which goes further. Let's see what's the percentage we can get from this. If I buy from the lowest point to the highest point, okay, Bitcoin still wins to a crazy amount, but barely anyone was buying a huge amount of Bitcoin back in 2012, and all the Bitcoins were mined, keeping in mind. So the supply of Bitcoin is very little, so the chance of you holding a large amount of Bitcoin is very slim. The better chance would be, 2013, that's like 379 times. I mean, you can see that there are stocks in the past, like in dot-com bubble, that goes up in a similar magnitude. So this comparison, it just doesn't make any sense, right? They should just put like Cisco's chart or Amazon's chart to compare with Bitcoin. Putting the index comparing with Bitcoin just makes no sense. Like, do these guys even know history of the stock market? Like, I wonder were these guys even born back then? Like, who are these amateurs looking at, like, comparing apple and oranges? NASDAQ, S&P, again, making the same mistake again. The index versus the companies, right? The Bitcoin, Ethereum, which is much, much smaller than index. They should put Amazon, Cisco, compare that with Bitcoin. Okay? So these charts are worthless. They're completely worthless comparison, in my opinion. They're just garbage. Okay, and they talk about NASDAQ rally, Bitcoin. Yeah, that's just false comparison, right? NASDAQ, like the Amazon, Cisco, Yahoo, they have gone up probably even more than Bitcoin, as I've shown, right? These are the history. These are facts. These are not something made up. These are what actually happened during the dot-com bubble. It was crazy. That's how crazy the dot-com bubble is, guys. A lot of companies, not just Bitcoin, there are like 3, 4, 10 companies that went up the same amount of Bitcoin back in the dot-com bubble. It was crazy. And the key takeaways, let's see, stagflation, economy has bottomed, and this is not depression. I don't know. It's still pretty screwed up right now. Significant uncertainty remains, sure, yeah, always uncertainty. Fiscal monetary, yeah, stagflation is highly unlikely. Not, in my opinion, not in the recent 2 years, but if we really devalue the currency too much, the US dollars, and keep playing the trade wars with China, we might get stagflation. We might, because if we keep increase our tariffs, eventually the US dollar becomes untrustworthy if we debase it too much, if we depreciate the US dollar too much, if we print too much US dollar, and that is going to affect it's going to making the US dollars lose value compared to other currencies. Right now, US dollar is very strong compared to other currencies, but if the US dollar depreciates relevant to other currencies, especially the Chinese renminbi, Chinese yuan, Chinese dollar, the things they import from China are going to become more expensive, and there could be some inflation down the road, right? That could be some implication. The US dollar will not be debased. Come on, the Federal Reserve, I don't know what's wrong with them. I don't know how they got this conclusion. They just showed the freaking chart of the money supply that is going up like crazy. And I don't know. I don't know like what their rationale behind this particular point is. We do not recommend gold as sure. I don't know too much about gold. If they don't recommend, we do not recommend Bitcoin as a strategic advised client investment portfolio, even though its volatility might lend itself to. Okay, so they do not recommend it to their clients. That's fine, and but they did mention that the volatility might lend itself to momentum-oriented traders. So Bitcoin is actually a good asset for trading. They do admit that. That's the underlying conclusion for that. Okay, so what's the key takeaway from my end? What's my key takeaway? My key takeaway is that even a huge investment bank like Goldman Sachs, they are aware of Bitcoin. That's all. That's the first thing we need to really, really put that in perspective. Okay, if you talk about Bitcoin in 2011, 2012, none of these investment banks are doing research on Bitcoin or even have a report on Bitcoin. Okay? And now, this report, the very fact that this report talks about Bitcoin alongside with gold, just shows how important Bitcoin and cryptocurrency have become. Okay? People are paying attention. All these investment banks are paying attention. Hedge funds are paying attention. It's getting huge amount of traction. The traction is still growing. As of 2020. And another thing is that not only they mention Bitcoin, they also mention Ethereum, which means it basically solidifies the number one and number two spots in the cryptocurrency market, in the cryptocurrency space, which is Bitcoin, Ethereum. There could be a third contestant that's going to rise in the future, but I don't know which one it's gonna be. It could be EOS, it could be Monero, all these privacy coins. It could be other token coins like Filecoin or other project that could become very successful. But right now, the king and the queen, the gold and silver in the cryptocurrency space is Bitcoin, Ethereum, and basically Goldman Sachs in this report admits that. Because that's what they included, right? That's the takeaway. So the takeaway is these huge investment banks, the institution, are looking into Bitcoin, Ethereum. Bitcoin, Ethereum getting a lot of attention, and that's something we have to understand. If they're getting a lot of attention, Goldman Sachs doesn't want to buy them, doesn't recommend them, that's fine. Some other company is going to buy them and recommend them, because everyone has different opinions in the market. But as long as people is gaining more and more tractions, that means there is going to be investment opportunity in these assets. And this report basically proves that, right? Rarely a huge investment bank like Goldman Sachs will pay attention to a asset class that's just insignificant from their standpoint, right? Bitcoin has $200 billion market cap. That's small to the stuff they invest in, the market index, they're like trillions, right? The companies they invest in are like Facebook, Apple, Amazon. These companies have $1 trillion market cap. So that's the takeaway. So my recommendation is that keep focusing on investing in cryptocurrency in the long term, especially in Bitcoin and Ethereum. And if you are knowledgeable in the space, you should look for someone who could possibly even revolutionize and dethrone the status of Bitcoin. The reason is, I think this is very likely there's going to be a player that can dethrone the status of Bitcoin. For example, back in 2000, during the first wave of dot-com bubble, right? The dot-com bubble, the king of the dot-com bubble was Yahoo. But now Yahoo is nowhere to be found, right? Yahoo's gone. Amazon became the king. So we just had something similar to the dot-com bubble in 2017, and the bubble has popped, and the king of that bubble is Bitcoin. So I think just by using the same logic, right? Look at history. The king during the dot-com bubble, Yahoo, was actually underperformed in the next 20 years. But the queen of that bubble, Amazon, absolutely outperformed. So this was the peak of dot-com bubble for Amazon. And Amazon absolutely outperformed in the next 20 years. You can see that. And we need to find some company that other than Bitcoin, some other cryptocurrency that other than Bitcoin. I think they're gonna have tremendous amount of opportunity in the next 10 years. That's just going to absolutely the performance could be something like this, and that is something we should look for. And I personally think Ethereum is one, and there could be other candidates for this. Okay, that's everything. Hope you guys enjoyed the video. See you next time.